Well, g'day there, everybody. Thanks a lot for joining me on this Monday afternoon market recap. We have seen collectively the three closely followed US markets break out and continue in their upward run. We have the S&P 500 breaking out to fresh new all-time highs. It looks as though we have now definitively pushed above this orange rectangular box. That is fantastic. This is working in agreement with the NASDAQ, again, printing a new all-time high. You can see that we have closed above 8,014 at 8,017.9 on the right-hand side of my screen. And what we've been more closely paying attention to is that of the Dow Jones Industrial Average. We began accumulating positions in this market back in the month of July and also towards the end of July, then of course really for the majority of August. Now what we've seen is that of the bull flag that we spoke about over the weekend, and today being Monday's session, we've seen the gap out of the bull flag itself in a very strong continuation that we are seeing as at the close on Monday today. We are up 245 points. If you pay attention to the actual price action between that of the close on Friday and that of the open during today's session, you can see that we have once again just established, collectively speaking, a bunch of new open windows. You can see this here on the S&P 500, a big defined gap. We're going to have to monitor this moving forward, but by all means at the moment, this is very positive for the markets moving forward. We can obviously come on back down and close these gaps, but it is going to be a temporary pullback. And we will be paying attention to the open windows and to see whether or not they hold. The good news is that this is working in conjunction with a lot of past resistance area that should act as new support moving forward, especially on the NASDAQ and that of the S&P 500. Now, if you've been paying attention to the analysis that we've gone through really since establishing that of the support back in the months of March and April, you are well aware that we are looking for the industrial average to rally all the way back on up and to close this open window. You can see on my screen up here in the top right-hand corner, that figure is about 26,435. Now, over the past number of weeks, we've been talking about a little bit of arbitrage in terms of jumping into diamond positions. On the call side, of course, to take advantage of price action coming on up and closing this window. So where we closed at, if we just round that down, say for instance to 26,000, we're still looking at this market rallying just over 400 points to come on up and to definitively close this open window. So if you've jumped into any of these diamond positions on the call side, obviously the bullish side, you are now being paid off. It did take a little bit of time for this to gallop, of course, to see what we've seen today or the print that we saw as at Monday. But I'm very happy about the closing price action, the intraday action. But we have to remember that we have that open window. Outside of that, some really nice candlesticks, and this market is looking to finally make its way on up to close those open windows. We're going to have a very important discussion up and when we do close that open window, but until that happens, we are very much so bullish on these markets collectively. Now, in our top 12 individual trade list, on the left-hand side of my screen, 4 stocks in particular I want to speak about today. These are stocks that we've been working or at least looking at in conjunction with the bullish overlook, okay, or the tone to the market, and I'm going to go through these right now. They have done tremendously well over the past 2 weeks or so, maybe not even that, really a week and a half. First stock that I'm going to recap is that of Netflix, bullish above 328. Today we got a gap up again, much like the markets, up another $5.76. You can see here we're closing at 364.58. However, this is a high wave spinning top. So we've really printed some pretty decent profit on this. We've made over, $30 of intrinsic value since the entry price. And this is really starting to look like that of a V bottom. My ultimate target up here on Netflix is about $400 per share. But if you wanted to take at least a portion of those existing positions off the table, perhaps you wanted to sell maybe 40% of those open contracts that you do have, that would be a very smart idea or an intelligent decision in my opinion, because it is a tremendously profitable trade. However, I'm still looking at this rolling all the way up to $400 per share. When I see this type of acceleration, however, I know that generally it isn't all that sustainable. Okay, so that's why I'm tempted with the idea of culling some of those positions on Netflix. Outside of that, this is again contributing to some really fantastic returns that we are seeing on Netflix. The second stock that I wanted to talk about was that of Google. We were looking at Google holding this green rectangular box. We placed the long entry at 1,228 to bounce off from this. This was working in conjunction with the rising exponential moving averages and also the backtest of this old resistance as new support. So we're really getting a really nice a grouping of a bunch of technical indicators, and the trade was really crystallizing quite well. If I bring up these oscillators as well, you can see that naturally we are pushing back down into oversold. However, we are starting to see the bullish cross to the upside, hence why we're seeing the bid enter Google. And today it was up very close to $20. So some really decent profits being made in Google. Personally, I'm looking at this moving up to 1,285. There's no reason really to take any positions off this at the moment. It is rather early, in my opinion, off from this bounce, and you are going to see a little bit of legs continue into the price of Google. I have to, of course, point out that we are establishing gaps in individual stocks as well. So if you go back to Netflix and think about that spinning top candle, the gap isn't really all that pronounced. And for a lot of purposes, you can say that there really isn't any argument there, but we are seeing these original gaps to the upside. Some are filling, some are not. So Netflix more or less did. Google's got a little bit further to fall back to actually close that gap. All right, doesn't have to happen. We may come on up all the way to 1,285 first and then close the window. But the trade at the moment is working out very, very nicely, and I'm very happy to speak about Google. Another stock that really benefited from the Dow Jones Industrial Average breaking out was that of Caterpillar, up $3.83. You can see we were looking for Caterpillar to hold this long-term primary trend. If I go out to the weekly chart, you can see just how strong this is. I mean, I'm really going back quite a distance to the beginning of 2016, and if you align all of these lows, pardon or excuse my illustration, it is quite hard to draw a perfectly straight linear line there, but you can see this long lower wick from really 3 weeks ago. That was really what we were looking for, something to suggest that there was buying activity still on Caterpillar and that we weren't actually going to break down below this area of support. Now, if I go back into the molecular level, this is the daily time frame, you can see again we essentially saw a very strong rally off from this support. We slowed down once again at the back test of what this old support turn resistance was. We were still going long as early as 137.59, but today you can see that we've now broken above this, and this is really looking as though we're breaking out of a very short-term bull flag, or even that of a sort of an odd-looking stair-step type of pattern. The good news is that we've closed above it, looking very healthy. A long day Morobozu, a nice little gap out of this area. So again, one of those stocks with a pretty decent gap, but I'm very happy about the way in which Caterpillar is playing out. You can see that we're adjusting out of oversold territory. MACD supporting the move, the RSI is supporting the move, the Stokes is supporting the move, price action is looking good, the markets are bullish. When you look at these trades, or if you position yourselves into these trades, this is when you sit back and you're very comfortable, obviously, with what the trade is doing and the outlook for the trade moving forward. So very happy to report on Caterpillar also. Another stock that we've been talking about is Baidu. Baidu holding roughly that 210, 213, 215 pivot. It did that, very similar to Caterpillar. However, it wasn't really with a primary bullish trend line. It was more so just a very important macro area of support. If you go back, you can see all of the times that we've actually tested 215, and we were looking at this level once again holding. Now the question becomes, how high is Baidu most likely going to go? And very similar to what we spoke about on Netflix, we do have this pronounced gap at about 245.76, so it's trading at 228.61. Very decent, well, a little move anyway. I think we are developing that, or at least we're very early on in what is going to be a stronger move up to 245, but it is a pretty decently profitable position at the moment. And again, every dollar it continues to make higher, it's going to really be recalibrated quite nicely into those in the money call options that we are holding on Baidu as well. We do have another gap, obviously, between Friday and today's session worth of trade, so you have to be mindful of that. We could see a little pullback across the board in the markets. That's really what I think may happen based off some of these gaps on the S&P and the NASDAQ, and also the Dow Jones Industrial Average. But understand that at the moment, if you're going to call this an exhaustion gap, you are still fighting that of the bullish trend to the upside. And I'm still looking at, or at least my mantelpiece, so to speak, is that of the industrial average coming all the way up to 26,435. And then when the diamonds get up here and the Dow Jones does get up into this area, I'm going to reset a bunch of these trades, and also my outlook on the market analysis, because I do think we could be potentially setting up some form of a larger intermediate retracement, which is going to work with the other markets pulling back from their recent breakout highs. It's going to shake a lot of people out. However, that is going to be another buy the dip opportunity, and then that will probably be that last thrust higher, so to speak, into that parabolic blow off top, when we're going to see such extremities in a lot of these oscillators that have been recently suggesting such of an option moving forward. So I'm going to leave it as that as at this Monday. If you have any questions, email me, success@pivotpoint-trading.com. Enjoy your Monday evening, everybody. I will be back with you later in the week. All the best. Goodbye.